What's up YouTube? Welcome back to another video. Thank you so much for the support on the past two videos. I truly appreciate it. If you haven't watched them, I will put their links in the description. So please go and watch them, and I would truly appreciate the support. Today I'm going to make a video about something super important in trading, and that is backtesting. It's something that I completely lacked on in the beginning of my trading journey until 2 years ago when I started taking it serious, and it completely changed everything for me. So guys, enjoy the video. So let's get right into it. What is backtesting? So if you don't know what backtesting is, it is basically where you go back in time on the markets and you just test out your strategy to see if it's a profitable and successful trading strategy. So what I used to do was, when I got started, and probably most people do it and they make that mistake, is they trade the live markets without testing out their strategy. And the problem with that is your duration to become successful is so much longer than the person who first backtests his strategy and then goes onto the live markets. So why do I say that? Because when you backtest, you can basically go back to, let's say, 2021 and rewind your charts and just test that entire year's price action with your strategy and see how successful it is. Where when you jump into the live markets, you're basically losing percentage with your own capital to test out your strategy, and it takes so much longer because you can backtest an entire year in, let's say, a few days or in a week or in a month, whatever time you have available to do that. Or you can go into the live markets and it's going to take you an entire year to figure out how successful your strategy is. Another big benefit with backtesting is it gives you so much confidence in the markets and it makes you confident in your trading strategy. So there's three key elements I want to talk about and just quickly mention why it's important to backtest. I've already mentioned it, but the first one is to see if your strategy is profitable. The second one I want to mention is the average duration between trades. A lot of people, when they're trading the live markets and it's quiet and there's not a lot of trades happening, or there's a lot of news, or it's just range-bound price action, what starts happening is you get greedy or you want to be in the market the entire time. But when you backtest a strategy on a pair, for example, let's say you backtest Euro US dollar, just for example, for that entire year, and you can see that in an entire year on Euro US dollar, you only take about, let's say, 20 or 30 trades. Let's say, just say 24 trades to make it easy. So let's say you take 24 trades in a year on that pair. You know you're only taking an average in an entire year about 2 trades every single month. So you know that on average, you're only taking a trade every second week on this pair. So you do not have to be in a rush to take trades, or you don't have to feel you have to be in the markets the entire time to make percentage, or because you know that sooner or later the correct price action is going to form and you're going to take the correct trades. Now we know with trading it's unpredictable. I'm not saying every second week there's going to be a trade, but you get what I'm trying to tell you. You know, maybe in some months you take 4 trades, in some months you don't even take a trade. So it just gives you that, how can I say, that calmness, and it helps with the emotional battle when you trade. Now, number 3 is you learn key price action on each pair, because let's say you trade more than one pair, each pair moves differently. They move quite the same, but differently. You know, on some pairs, you need to see bigger impulses to take a setup, whatever your strategy is, or you need to see more of a breakout before you take a trade. You know, you just know each pair moves differently. Some pairs have more wicks than others. And on certain pairs, you won't take a trade if there's a massive wick, based on my strategy. Just for example, if there's a certain size wick on a pair, I won't take that trade. But on another pair, if there's a small wick, I will still take the trade. So it all depends, and you have to figure that out through backtesting your plan or strategy on a pair to get the key points of the price action on that pair. So you're also probably asking, what do you need to backtest? So I use the trading software called Tradingview. it's a free software that you can use, but unfortunately, if you do want to backtest and rewind the charts, basically use the bar replay tool, which I'm going to show you right now on my screen. If you want to use that tool, unfortunately, you have to pay for the monthly subscription or the yearly subscription, but it is completely worth it. I'm not getting paid to say this, but that is just what I use to backtest. And I'm going to quickly hop onto my charts and onto my screen to show you guys how I backtest. I'm going to backtest only 1 month of Australian dollar, US dollar, just to give you guys an idea of how I backtest. Okay, so as you can see on my screen, this is Tradingview and this is the platform I use. So I'm just going to quickly show you guys how the bar replay tool works. And what's nice about it, as I explained, unfortunately I have to have the paid plan on Tradingview to use this bar replay tool. But it just works so awesome because you can basically just erase price, if I can say it like that. So you'll see you get this little icon here, or you first have to click on the replay, or you can just use this icon at the bottom. But let's say I click on it and I want to erase price from this point backwards. I'll just click on that and you'll see it just erases price. And you'll see, and then you can just click play here and then you can just play it forward again. So that's quite awesome. Or you can just click bar by bar using this little icon at the bottom. So let's quickly just start with it. So I went back to 2021 and this is actually a good month. I backtested back in 2021, September, and I'll just show you guys how I backtest. If you want to learn more about the strategy that I trade, or you want to do the course I done to learn the strategy, I'm not going to tell you guys exactly how I take the trades, because unfortunately I have to do the entire course to really understand it. But I posted the link to the course that I done in my description, so you can always go and check that out and do research about it. And it really truly changed the way I trade. And I done this course by Guerrilla Trading about 2 years ago, and it's just so freaking awesome. And I really enjoy the strategy, and it's a simple strategy. It's not easy, but it is simple. So let's hop on to the market quickly here on the charts. So you'll see it shows 1st of September 2021. So let's just get right into it. So I'll show you guys the type of setups I look for as it starts playing through. So you can see we had this is the recent low and that's the recent high on the pair. As you can see, we had this red candle pullback, the inside bar with the outside bar with that green candle. So this is actually a setup, but this red candle is a bit of a warning sign for me. So I wouldn't be really looking at it. So let's quickly move my high, because I basically trade the recent lows and recent highs only on the 1 hour time frame. So let's keep on going through price. So you'll see we broke this high and we retraced. So that's also a warning sign. So it just shows that we can start basically ascending. So you'll see we had a wick. So we broke the high, retraced. So we can just start basically ascending. And then maybe we can have a reversal. But yeah, let's see what happens. Go back. Let's play through price. Let me just quickly move my high to here and my low to, sorry guys, I don't know why this is doing this, and my low to there. Then we can just keep on looking at what's happening with the price. So you can see we started descending, and then this is the low now, that's the high, and then we had this impulse to the upside. A little impulse just broke that high, which is a liquidity area. So we'll just see what happens from here on. As you can see, so this is a very weird move because there's a lot of wicks. So let's say, let me put my high here on the top. Oh, sorry, I don't know if this thing is like locking in or something. So if you look at all of these candles, each candle broke the previous candle's high except this one. So that's the low. So this is the impulse. So it's not a massive impulse, but if you look at the trend, you can see price is trending upward. So you can see you have an impulse, little retrace, impulse, we had this flag formation, and then we impulsed again. So it looks like price wants to keep on going up. And if you look at the red candles forming here, there's nothing massive that shows a shift in momentum. That little wick is a bit of a warning sign. But if you look at the next candle, and there's a lot of wicks at the bottom as well, it shows price wants to keep on moving to the upside. So this would give me motivation to take this trade. So this is definitely a setup I would look at taking. So that's our high. So I'll take this trade about 2 pips above the high. That's 9.4. So let's say 1.4. Let me just move this up. And I'll take it with a 13 pip stop. So what I'll basically do is, you'll see this is on a Thursday, 3 o'clock. So I'll just basically wait. I'll set a buy limit and just wait for price to retrace and tag me in, and then carry on to the upside. So let's see what happens. So you'll see there, price retraced, tagged me in on that recent high. So that's my recent high, tagged me in. And you can see the candle is starting to impulse. Then we got that retrace, but also rejected to the bottom. So let me just move my highs. So that would be my new high. And this would be my new low. And you'll see price keeps on moving and started ranging basically. And then it broke the high again. So let me just put this to the back. So now I can move my highs. And the nice thing with the strategy that I trade, it has a very strict management rule. So this means that I can now lock in profit. So when I lock in profit, it'll be 2 pips below this. So the low is 986. So that will be 966. Just get it there. Just type it in like this as well. Okay. So now we're locked in on 0.4%. So let's see what happens further with the price. So it keeps on going, keeps on impulsing. We had this nice inside bar there. There's a nice inside bar that formed. So with this impulse, I'll definitely start looking for more entries to the upside. But as you can see there, we broke the high. And then we had this massive candle. So I wouldn't really set the entry because we had this massive wick, which is a bit of a warning sign. So let's up at my high there now. My low will then be on the most recent low, which would be this candle. And that means that I can lock in profit again. So it's a nice thing about the management rule. So the low is 9391. So that's the low. So I'll probably lock it in around 71. Let me just type it in. Okay, so we locked in at 2.75%. And then we just wait for price to keep on playing out. And now just starting to range. So wicks are warning signs. We either range or reverse. As you can see, we started ranging. And there I would be tagged out. Let me see what's the low. 7.2. We are locked in at profit level 7.1. So it might have taken us out or kept us in, but that candle would definitely have taken me out. So yeah, that's a good trade. Let me quickly, then what I'll do is when I backtest, I'll just basically type on my chart. On this trade, I made plus 2.75%. And I'll just leave it here on my charts. What you can also do is you can use an Excel spreadsheet to track all the data. But what I like to do is I like to go through the entire month and then go back on the trades and then type them in on let me just show you guys quickly. So I'll basically just type it in on my notepad like this. The trade number I took for the month, the data opened it, the pair, the setup, all that kinds of stuff. So all this information. So you can set up something like this for yourself. That's quite similar. So you can set up something like that for yourself. I'm on Excel or on your notes, or however you like to do that, however you want to keep note of your backtesting. But I like leaving it on the charts, and then I can always go look back and see how the trade played out. And you can always backtest the same pair over and over and over again, and just wipe your charts again and write your percentages there on the screen. So let's carry on looking at price. So you'll see we backtested about a week now. From the 1st, it's already the 6th. So you see with backtesting, it goes so much quicker than trading the live markets to test your strategy. Because I mean, on the live markets, you are literally waiting for price to form the entire time, where you can just quickly see within a week's price action what happened. So let's see what happens next. You have a range now, broke out of the range, made a large wick at the top, and then now we started pushing down. So that's going to be our high. Here's our low. And usually with these wicks, just pause it there, it's getting out of control. So we have a large wick, and usually, as I said, we range or reverse, but now we reverse to the downside, broke this low with a wick. So it shows we are really messy price action at the moment. But let's move it to our recents. Let me see what happens next. So as you can see at the impulse with a wick. So this is basically a setup I would look at, because it looks like price. A lot of people who are selling in the market at the moment, when this happens and a first lower high forms, they start buying. But that's where you want to get involved in the market and do the opposite. But this is not a setup for me, because you'll see this wick is a bit of a warning sign, because it can just range or reverse. But we did get this impulse down, another wick at the bottom. So let's see what happens. The key thing with backtesting is, as I said, that duration between trades. You saw we had a week, we took one trade. It's been another, let's call it a day or two, and we haven't taken a trade again. So we just wait for the market to give us opportunities. So you broke the low there, retraced, and we are just ranging. So let's see, that's our low. That's our high. And we're just ranging because there's a wick. So as I said, we range or reverse. We see what happens. It's warning signs. So I don't want to get involved in anything that can cost me my percentage or my capital. So we broke the high. That's our high. And let me put my high there. My low. Let me move it quickly. So that's the low then. We broke the low, rejected, couldn't move down. We had this big green candle, which shows that price wants to start moving up. So let's see what happens. So we moved up. We sort of had this price action. We were breaking and retracing. So you'll see we broke there, retraced. Then we had this big red candle. So that's basically a shift in momentum for me. We had a wick. Oh, sorry, I don't know why my mouse is just doing this anyway. And then we had this push down. So we basically had this ascending. Sorry guys, I don't know why this is like just messing around so much. But yeah, so you can see now we have this push down. So let's see what happens next. It definitely shows that price wants to start moving down. So we had this impulse, ascending impulse. Here I would actually definitely look at a trade. We're a bit range bound here, but we had this sort of an impulse down. This is the break, but it retraced. So it's a bit of a warning sign. I'd like to see a bit more. So let's just see what happens next. Yeah, we just completely started reversing, because that was our low, broke, retraced, warning sign, means price doesn't want to move down. Let's just play through price. Nothing major happening. We're just ranging on those highs and lows. As you can see, we're just staying between it. Then we had this ascending. You can see it started forming an ascending. And then we broke to the downside. But immediately when we broke to the downside, what happened? Price rejected with this green shift in momentum candle. So let's see what happens next. Then price shot up again with this green candle. As I said, that was a warning sign already, that green one. And then we got this other green one, just showing us price does not want to move down. And it's just basically ranging. If I zoom out and you look at it, it's just ascending, descending, a little ascending, try to push down, but nothing major, because we're looking for impulses in the market. And there's no real impulses showing us price wants to go in a certain direction. So let's see next what happens. Again, we're breaking the lows, retracing, breaking the lows, retracing. It shows me that price actually wants to move up. And it just shows you have to be patient, you know, in the markets. As I said, you have to be patient. I mean, look how long it's been now. 6th of September, we're on the 15th of September. And still no trades on the pair. And the thing is, when you trade the live markets, as I mentioned earlier, is when you trade the live markets and nothing's happening, you should sit on your hands. But you tend to just want to be in the markets the entire time. But with backtesting, you can see that you have to sit on your hands sometimes. So there's major lessons you can learn in backtesting, and it just teaches you so much about your strategy and so much about price action and so much about the warning signs and all that kinds of stuff. So as I said, we had this descending. Now we are just starting to ascend again, and we have these wicks at the bottom. So price wants to move up, but remember it can move anywhere, up or down. There's nowhere it has to move. So as I said, we're ascending, breaking the high, retracing, breaking the high, retracing again. So let's see what happens. I don't want to make this video too long. Okay, so this is something that I want to see happening. So we had this ascending, broke out. Let me just see what happens here. The high, that's just even high, so that's the impulse up. Okay guys, so let me just go back in time here, because I think I just went a bit too fast. And that's a nice thing with the backtesting tool, the bar replay tool. So this is, we had this descending wicks, and then we had this large, sorry, that magnet mustn't be on. So we had this large ascending forming here. And that shows, if you look at price, when it's such a nice ascending, breaking the highs, retracing, we're just looking for a setup that shows it wants to push down. As I said, we're looking for something to push up, as it's more a descending. But because of it's such a nice flag formation, and there's some momentum pushing down, price can definitely just push to the downside. Sorry for my drawing. It's the mouse. I don't know why it's going like that. I'll have to get a new one. So let's carry on. So we had this push. There's an inside bar, and we had another nice red candle. So if you look at the ascending and this happens, this is a very high probability trade for me, because it shows that we had a one candle pullback and price just formed this nice solid red candle. So I always just check what day it is. So it's 16th of September, it's 7 o'clock in the morning. So it's not a dangerous time to trade. Early on Mondays and Tuesdays, I'm a bit more aware of what trades I take. But yeah, so I definitely set the order here. So where's my short position? So if it's such a big break, I'll place it on the low. So the low would be 208. So I'll probably place it at 288. So just one pip down. 13 pip stop loss for me on this pair. And yeah, then I'll just see and wait what price does. So let me just put this at the back. So there, we got tagged into the market. And now we just be patient and see what happens. So we got to retrace. This would scare a lot of people while you're trading live, but on backtesting you can see it doesn't always tag you in and just drop, you know. So there we broke the low, and now we're starting to see some momentum to the downside. Sorry. Take my low would be there, my high would be there, and I would basically be able to reduce my risk to above that high. So there we're starting to see a nice push to the downside. Still don't have any locked in profit. So what's nice about the strategy is it removes so much emotion because it has a very good management rule. A lot of people who's floating, let's say 3%, 2.5%, whatever, would just want to close the trade. So I wait for the market to take me out of the position. So let's see what happens next. We start reversing. You know, I'd still not be able to lock in any profit. I'm still on a reduced risk because my stop loss would be there. So we're ranging, almost takes me out because my stop loss would be 2 pips above this high. So let me just show you guys an example. So around there, but just 2 pips above, but you'll see it didn't take me out. And it's just all about patience. And then it started dropping again. So it's on a Friday, so that's a weekend almost. So I'd be able to move my low to there, and my high I would be able to move to there. So still not locked in, but we're basically on almost break even. And if a pair closes like this, I'll definitely keep it over the weekend, because the chances of it gapping all the way up to there is almost nothing. Okay, and now the market opens the next week, and that would be our new low. That would be our new high. And that would give me an opportunity to lock in some profit. So let me just put it back on 13 pips. Take my magnet tool away, pull it across, put it 2 pips above that. So that's 5, 7. So let's call it 7, 7 or 7, 8. I'm just going to put it there so you guys get an idea. And then, yeah, so we see what happens with price. So you see we had another drop. That's a cool thing with the management rule. As I said, the market will take me out when I manage the trade. So that would be my high, and I would be able to lock in again. So just put it above there. So you're floating at about 3.88%, and the market is still carrying on to the downside. Okay, so sorry that went a bit too quick. So that would be my new low. That would be my high. And price would have basically, let's say there, we would have been managing the trade up to there. And price would have taken me out around there. So let's say 2 pips above that is 5.3. Oh, 5.3, let me just type it in, it's quicker. Okay, 5.3. Perfect. And then I can just put my low there again. So basically locked in at 5.65% at the moment. And then price took me out after that candle. On a Monday, so we held this trade from, say, 16th of September, 7 o'clock, until the next week, Monday, until about 2 o'clock. And price took me out at 5.65%. So very happy with that trade. Good trade. And it just shows you that you have to be patient in the markets and not take any setup. So that's, as I said, with backtesting, that helps so much. And then, yeah, so let's just see what happens further in price. See if we get any other setup. So we're starting to ascend again, and then we started dropping. So we ascended, and now we're starting to go to the downside again. So this ascending, I'll definitely look at a trade here for same as the previous trade we just looked at. Not like a continuation, but more like a reversal trade. But because of that small break, it's a bit of a warning sign for me. So I wouldn't place my order there. And we just started dropping there. And then we had this green candle. It still broke the low, but it does show a bit of a shift in momentum. Oh, sorry guys. This thing is just freaking out, going way too fast. Just want to see something quickly. Let me just go back here quickly. So as you can see, here's the low, there's a high. I just want to see if this one broke the high here. It's 424, 423. Okay, so this is a setup for me, hey? So here's an ascending. We had this ascending. We had this impulse down. So I'm basically looking for price to keep on doing what it done over here. So this is that setup I spoke about a bit earlier. So I'll place my high there. So it broke it by a micro pip, the high, and then it just retraced. So after that candle ended in a red candle, I would definitely place my order on this red candle. So it is 10 o'clock. I only see this now. So 9 to 11 is spread hours. So I wouldn't place my trade at that moment. I would wait for another candle. Let's just see what happens. Let's see. Low 11 o'clock. I almost placed the trade here, but I wouldn't take the trade because after 11 o'clock we had this wick at the bottom. So that's actually a warning sign. So I'm not going to take that trade. But I would have taken it here if it was not in spread hours 9 to 11 in South African time. But it all depends where you are in the world, what your spread hours are. So yeah, just broke the low and retrace. So that's a warning sign to me. So let's see what happens next. And then just because it broke the high and retrace, check what happened a bit later on. So I almost placed that trade. I was really going to take it, but then I just saw. So that's key things you have to also look at when you backtest at the times you're trading, and certain times that you don't want to trade in the market or not be in the market, like in spread hours, you don't want to place a trade. So that's, as I said, 9 to 11 South African time. And I would have placed that trade, but luckily I just checked that I don't want to take it at that stage. So anyway, we got this green candle. We're not in the market, so let's just see what happens next. Okay, so we had this large wick. We're just ranging around, and then we had this massive wick, which just shows the range reversal. We'll see what happens next. Yeah, and we're just ranging. We had a bit of an impulse there, but I definitely want to get out of this liquidity area above this wick, to be honest, before I look for any setups. Yeah, so we broke that high of the wick, and we just retraced immediately with that red candle, which is a massive warning sign. And I would not want to look at going long on this pair then. Let me just move my low there. Okay, so now we're breaking and retracing. Okay, so we broke the high, retrace, broke the low. So let's just quickly put our stuff where it's supposed to be. And then we started seeing this impulse to the downside. So it looks like price wants to start moving down, which is a good sign. So we had this low there, high, low. Let's see what happens here. That's a bit of a green candle, a bit of a shift in momentum, but it did break the low. So that's a good sign for me. It made this high, low, high, low. So this is definitely a setup for me. I'll definitely look at taking this trade, because I'll put my line here. I just want to quickly do that. Make it somewhat white. So that's my bomb line, because Joshua Bunker in Guerrilla Trading teaches 2 entries, and this is one of his entries. So I'm not going to explain it. You'll learn about it if you ever do that. Do the course or learn about it. So let me quickly put on my sell tool. So after this red candle, I would definitely place a trade. So let's quickly check there. Another 13 pip stop. See what happens. Yeah, and we got tagged out of this position. So yeah, that's then a 1% loss. So I just type it in as well, minus 1%. So you see, you can also see you take losses every now and then. That's normal with trading, nothing wrong with that. And with the management rule, I first need to see a break of the low before I can actually start reducing my risk. Let's see what happens next. We just started going up, and we just ranging. And ranging and ranging and ranging. So guys, I'm going to basically just cut the video off here. Otherwise, I can make this video go on for hours, because we can just carry on backtesting until current time. But I really hope you guys enjoyed the video, and that you guys got an idea of how to backtest. If this last part of backtesting is too long, sorry about that. I'll definitely try and make it shorter in the future. And my mouse that's messing around the entire time, I definitely need to get a new one now. I usually do not use my mouse except when I backtest, but this is the first time while I'm making this video that this is happening, to be honest. So guys, thank you so much. Please like and subscribe, and I would really appreciate it, as I said. And I hope to see you guys on my next video. It's going to be an awesome video. I'm going to talk about prop firms, and how they work, and everything to do with prop firms, and how they can really boost your trading career. So guys, have a blessed week, and I'll see you on the next video.